Scott Bauer, CEO of Prosper Trading Academy. Great to have you with us. In terms of options on that TLT, what are you seeing? Because we do, of course, right now do have that TLT up about 0.2%. Even so, well below the 200-day moving average, and we all know that I love charts and technicals. There appears to be some sort of a topping pattern, a double top there, not confirmed right now, but it could. That suggests that there could be some serious declines ahead. What are the options telling you?
Yeah, over the last few weeks and months, Abigail, we've seen a decided put-call ratio skewed towards puts, about 2-to-1 actually, which, is telling you that people are buying puts, expecting TLT to decline, rates to go up because they work inversely to one another. Today, that's flattened out quite a bit. Now, this is just one day. It's almost 1-to-1 today. It's just slightly skewed on the put side. In full disclosure here, we were actually short via using put spreads, the TLT from about 151 down to 144. We covered our positions, and actually right now, we felt that TLT moved way too quickly to the downside, in conjunction with the 10-year going to the upside. We're actually long some upside call spreads now.
Well, certainly a great trade there on the put spreads to the downside. Those call spreads, it looks like it could be a little bit challenging because it is such a fast move down, to your point, that the chart looks very heavy and dangerous. But I'm sure that you are hedging that in various ways. Speaking of volatility, though, because there is so much volatility, the MOVE index relative to the VIX still way elevated, but it has come in too. So if you factor that into the TLT, maybe that gives you a little bit more confidence in those calls. But you like the banks here.
I do. When you look at XLF, and especially with earnings season coming up, a lot of the major banks reporting end of the week today, that thing gained 5.5% last week. I do think it's a little bit overextended, just as I believe TLT is a little bit overextended on the downside. But in the banks, especially in XLF, if you look at the implied volatility, if you look at the option volatility, it's actually very cheap. It's very inexpensive. Put call open interest slightly skewed to the call side, although today there is some very heavy call buying in there today. It's almost 2-to-1 on the call side, with people probably thinking that, with impending earnings, these banks are going to be to the upside here. I would look for a pullback personally in the XLF down to about 39.5, which is the 50-day moving average. To me, that's my entry point. That's where I want to get in. If you go back about 4 weeks or so, back to December 20th, XLF sold off to its 200-day moving average, has not seen the light anything since then. It has just rallied. I'm waiting for that pullback.
So really the inverse of that TLT chart. Is going to be interesting to see what happens, because other technicals may suggest the 10-year yield could hurry above 2%. Scott Bauer of Prosper Trading Academy, thanks so much for joining us here for Options Insight. We'll have to bring technology into the conversation the next time, because it, of course, is under pressure with all this. Caroline, back to you.
Really great conversation.